Welcome to a weekend edition of the Exploring Mining podcast. My guest today is Chris Temple, who is the editor and publisher of the National Investor. I had so much fun speaking with Chris. He tells it like it is and is a wealth of knowledge. We cover everything from nickel, lithium, U.S. policy changes, the possibility of $200 uranium prices coming up, and how the junior space can adapt and succeed with a focus on education for new investors in an ever-changing world. To learn more about Chris, head to nationalinvestor.com. And as a reminder to investors, please read all disclaimers and disclosures, and as always, do your own due diligence. Chris, thanks so much for joining us on the show. For listeners who are new to following you, can you just give us a brief background on how you got started in the markets and in metals and mining, and where you're at now?
Well, Callie, it's great to be with you. Nice to see you again, first of all. Look forward to seeing you at the next Mines and Money when our paths cross. But it's literally been 45 years since I got into the financial planning business and stuff that's real. And I'm going back to 1979 when I first got into this. So I've always liked following stuff that's real, be it, commodities generally, especially metals and energy and whatnot. I spent a lot of years in the retail end of things, but almost from the start, I love to hone my skills to speak and to write and educate people on what's going on in the world, what's going on in the markets, whether they should zig or zag at any particular point in time, et cetera. And in fact, on my website for the National Investor, my motto is that you can get information anywhere, but here you get knowledge. And so I try and impart to investors, to companies trying to find investors, whoever, the kind of knowledge that you have to have today. And it's been for, these 45 years for me, it's been a moving target because the markets have changed, technology's changed, the way investors behave has changed a whole lot. And it's an increasing challenge to keep up with what's relevant, to not be too terribly opinionated. You need to have a good working knowledge of the markets, but sometimes the markets don't agree. There's a lot of dopey things going on these days. We see a lot of big name tech stocks that don't have fundamentals trading at nosebleed prices, and we see stories and stocks with fundamentals and with real assets that nobody cares about. And it's a tough situation to navigate. I think we're going to see as we get into 2025 as well, Callie, we're going to see a little bit more of a reality check. The great stagflation, as I've called it, is going to rear its head a bit more. We're going to learn that inflation is not dead and buried and back in the toothpaste tube, but it's still going to be very much with us. So I think a lot of people right now, especially if you're like me here in the U.S. and we didn't have an indecisive election last month, but we had a fairly decisive one, at least by recent standards. Everybody's oh goody, the Republicans are running everything, and we can keep running all of these expensive stocks and make them even more expensive. Everybody's going to turn into a pumpkin come January 20th when the president is sworn back in, and all of a sudden math starts to matter again.
And obviously, you speak at a lot of different panels and webinars, and I watched some of the fast markets talk that you guys had. And I wanted to start the conversation off with battery metals. Specifically, I loved your conversation about nickel because we talked a lot about nickel last year, and we did not see the year that we wanted to see in nickel.
No.
And you guys make a really good case for 2025 for nickel. So I'd love to just get into that story and your theories on that.
Well, battery metals generally, and I think this is true, Callie, with virtually all commodities. The long-term prognosis, if you believe that we're going to still have civilization and that developing markets are still going to matter, that emerging nations want more of the better things in life. And I don't mean two cars in the garage for every one person, but I mean just the able to turn on a light switch, which 2 billion people on this planet still can't do. The ability to cook over maybe a gas flame rather than over dried manure, literally, which a lot of people are still doing. So when you look at that, when you look at our burgeoning needs the world over for stuff, you've got to love the long-term prognostications for just about every commodity. But the problem has been that I think that investors got ahead of themselves a couple of different times. We've seen these crazy swings in lithium. We saw a crazy swing in the nickel price. Now, the nickel price recently has been under the cost of production for just about everybody on the planet, with few exceptions. The good news about nickel, even in the next year or so, as you indicated, is that nickel is probably going to be one of the first to rebound meaningfully because supplies are so tight right now and a lot of warehouse stocks were raided. So you've had mine shutdowns, you've had a lot of the stocks that were already in inventory, they've been depleted. So there's not a whole lot left there. So nickel's probably not my favorite story of commodities generally, but among the battery metals, lithium is going to have a lot harder time rebounding. And even when it does, it's going to be kind of, hit and miss. I mean, we've got too much supply that caught up before demand was there. And there's been this swing back and forth. I remember vividly in 2018, you'd had a huge run in lithium and boom, a Morgan Stanley report came out that said, okay, the market got ahead of itself. Lithium stocks all crashed. Then they go right up to the stratosphere again. Boom. And now we're back down in the basement. So nickel I like because it's going to rebound, in my view, sooner. Lithium's going to be tough. Copper's got great long-term fundamentals. All of these, though, Callie, and I have to point this out. When you look at the macroeconomic backdrop in the world, you've got these crazy opposing forces. On the one hand, the huge liquidity, the huge valuations, and still inflationary pressures here in the US, and we're, of course, the biggest driver in the world of economic activity. The second biggest driver of economic activity is who? China. And they have got exactly the opposite dynamic because they are fighting off full-blown deflation. It's one of the reasons why commodity prices have been weak for many months now, is because of that overhang in the market, because of overcapacity, oversupply, and China therefore trying to dump a lot of cheap goods on the world market. So what we're going to see in the year ahead is that these two competing dynamics are still going to wreak, in my view, havoc with commodity prices generally. And you're going to see indications from time to time where even good fundamentals with commodities are overshadowed by money managers who, as soon as you tell them China's weakening, doesn't matter what the fundamentals are, you hit the sell button, for Chinese stocks, for copper, for anything. And we're going to deal with that, I think more so in the near term, the next year or so, until we can say that we're on the launch pad for the next big move collectively for commodity prices.
I was watching a podcast recently and they said that most of these battery metals were bought on the euphoria of the belief of all these technologies just taking off, and they've all been sold down on impatience that we're not there where we thought we were, whether that's EV sales. And I feel like that's probably the most accurate way you can describe how North America has traded
Yeah.
commodities lately.
Well, the lion's share of EV sales in the world, of course, are in China. Half of all new EV sales and hybrid sales in China are, one or the other. So they're even now with the internal combustion engine in China. In the U.S., to focus on the U.S. specifically, most of the easy sales with the benefit of a tax credit have already happened. And look, I'm not here to say that the industry is going to go away. I don't believe it will. A lot of people, and I think part of this too is sentiment, which has overdone some of the selling and some of the bearishness. They think, well, the President Trump is going to do away with EVs. No, he's not. And when you look at the stories in this country, be it a Piedmont Lithium in North Carolina, be it a Talon Metals in Minnesota, and the other development stage projects in Minnesota that have been bottled up, unfortunately, that have nickel and copper and whatnot. A lot of these things got their start before Joe Biden and the IRA. His Secretary of Energy in Trump 1.0 was Rick Perry, a former energy state governor from Texas, did a great job. He was the most unsung hero, I think, of Trump's first term, and he pursued an all of the above energy strategy. So a lot of plans got laid for gigafactories and for EV plants and so forth before Joe Biden ever set foot in the White House. Some of the things were accelerated, some of the things were hamstrung, but we will still have an EV industry. It's going to have to compete more evenly with other technologies that are out there. But look, we're still going to have an all of the above strategy. Nuclear energy is a great emerging story that everybody is on board with pretty much the world over, not just Republicans and Democrats in this country. We will have EVs, we'll have hybrids and so forth. So these industries aren't going away. And I think to the extent that a lot of people just have thrown out babies with bathwater thinking that, Trump's going to kill it, I think they're incorrect.
I would agree. If he has Elon Musk with him, I feel like EV's probably here to stay.
Hey, let me point something out because and you and I spoke separately about this before. There's some public policy things that I'm involved with that hopefully are going to get some traction in 2025 in both Congress and in the White House. But one of the things that needs to be done if you're going to have a vibrant industry of any kind, and of course the headlines right now are that right before you and I got on here, China announced tightened embargoes on some rare earth elements and antimony exports to the U.S. This is on top of other embargoes they had before. So, trade wars are intensifying, and that makes it especially important for the U.S. And I would say Canada as well. We need to get our act together yesterday and figure out where we're going to get our supplies more safely and closer to home of a lot of these things that we need. And one of the proposals among several good ones that have been made is that instead of having, with the Biden administration, what they got wrong, badly wrong, was not paying enough attention to the whole supply chain and food chain of from mining to refining to smelting or some other kind of recovery to all of the different components needed. They just thought that EVs were magically going to materialize. And if we give consumers a $7,500 tax credit, we'll still surely buy one. Well, that doesn't do anything to help the cost long term. So what you need to have happen is there needs to be a game plan, and I would argue even some manner of price support or some kind of a price guarantee on the front end so that you're going to get these minerals out of the ground as a first matter with at least some reasonable price certainty. Because think about it, Callie, if you're an investment bank and so, you've got money burning a hole in your pocket and or in your accounts, and some lithium development company comes to you and says, "Hey, we got a great project. We still think the future is great for EVs, so will you finance us?" How comfortable you're going to be financing them when you don't know from one minute to the next whether lithium carbonate is going to be $60,000 a ton or $6,000 a ton? And that's the environment that we've got. And so there needs to be a ground up crash course on the part of policymakers to figure out how we're going to get these things out of the ground with some price certainty, with some decent profit for everybody, because no one's going to finance projects with the environment that we've had, where you've got lithium and nickel and the rest of them just up and down like a yo-yo.
You just briefly touched on antimony. That's, gained so much hype in the last while. It's, it kind of feels like the old days of lithium when that was the number one thing that everyone's talking about.
In the US, we have basically no production of antimony. We have no production of titanium. Only one company, a great company on my list, actually the founder of this company and CEO was the founder of Piedmont Lithium back when. So there is at least some emerging titanium story in this country. But you're talking about things like this, like titanium, antimony, rare earth elements, magnets. These are needed for defense applications. They're needed for a lot of high-tech applications, and we simply don't produce these things in the U.S. I mean, even looking at something, another one of the companies on my list, they've got a project that has a pretty decent amount of barite, apparently. This is down in the Arizona, California area as a byproduct. Barite is a very important substance needed for drilling mud when you're in the oil and gas industry. So, we forget as Americans. And this is what consumers need to get their heads back around and investors need to get their heads back around. It wasn't just electronics and t-shirts and sneakers that America outsourced over the decades past to foreign production, chiefly China, but other countries as well. A lot of these things we don't produce here. When the whole COVID thing hit 3, 4 years ago, we learned that even medical supplies, even basic supplements, even basic drugs, we don't produce in the US or in the West. They come from China as well. So there's already this movement underway to try and get, and Canada's on board with this to some extent or another, depending on the particular goods we're talking about, to get these things produced again in our own backyard. The trouble is we're starting from a terrible deficit. We're seeing a trade war increase, for example, with China, and the incoming, President Trump 2.0 now is threatening tariffs on everybody and their dog and the fleas on the dog for industries that we don't even have. It's one thing if you have an industry already existing, or you're building or rebuilding an industry, and you're imposing tariffs on goods that would come in that would undercut those. But we're talking about imposing tariffs on China and others for things that we don't even have. And so the logical question is, all right, well, now where are we going to get them, smart guy? So I think that a lot of people that are on board with this whole tariff thing, and I'm not opposed to tariffs in a general sense, but here again, I think this is where 2025 is going to come around, and we're all going to get a reality check on a host of things. Not the least of which is that for all of the great talk and for the good people that President Trump is going to surround himself with, it's not going to be an easy or quick job for us to start reforming permitting, for example, so that projects, and Callie, I'll give you an example. It was 25 years ago, this year, a quarter of a century, that I first set foot on what's called the North Met project. It's up in the Iron Range of Minnesota, one of the storied mining stories throughout American history. All of the iron to build steel, steel skyscrapers, bridges, everything in the early days of the Industrial Revolution, it all came from this part of Northeast Minnesota, by and large. More recently, people have found that not only is it a great iron ore area, but there's copper, there's nickel, there's cobalt. There are two development stage world-class battery metals PGM projects in that area, right next to one another, North Met and then Twin Metals to the northeast, that have been mothballed now for several years for one reason or another. So it should not take, and I followed the North Met project. Used to be owned by a company called Polymet. Now it's changed. Glencore and Teck have a JV, I believe, on this project now. But one of the biggest development stage stores of copper, nickel, and cobalt in this country, really on this continent. And at 25 years after I was there, they still can't produce this thing. You've got multiple layers of permitting, some of it redundant. Anybody and their brother can file a lawsuit if they want to stop it. So, okay, fine. If we as Americans are going to sign on with that, then we should all be walking to the store. We shouldn't have cars. We shouldn't have heat in our homes. We shouldn't have bridges to drive across, et cetera. And I am being a little facetious, but to make the point that we need to fix these things, and it's not going to come easily, even if everything goes right, legislation and policy wise. You can't just turn these things on like flipping a switch.
So you kind of alluded to my next question from our conversation before. You talked about the importance of, and I don't feel like, again, a lot of on the Canadian side were probably as well versed on the American politics. Doug Burgum, can you talk about some of the importance and the changes that will be happening for permitting? Because yes, it's been a huge pain in the butt for mining for a long time.
Yeah, well, I've done a couple interviews specifically on this in the recent past, and I'm happy to address this because, I alluded a few minutes ago to Rick Perry and the good job that he did as Secretary of the Department of Energy when Trump had his first term. Doug Burgum was given, first of all, a nomination to be the Interior Secretary. That is the agency that oversees groups like the Forest Service, the BLM, and so forth, deals with land management for lands that are under the control of the federal government. And his attitude toward permitting reform and getting a lot of these projects, like I mentioned, North Met and Twin Metals in Minnesota, getting them unstuck is going to be the polar opposite of what we have seen from the Biden administration and from his Interior Secretary, thankfully. But it goes beyond that. And this is encouraging. And again, not that we're going to fix everything tomorrow or next year or even in 5 years, but we can get a good start, arguably. Not only is Doug Burgum, and again, an energy state governor, in this case from North Dakota, not only will he have the Interior Department, but he is being appointed, in addition to that, as kind of a new, this is my terminology, I don't think this will be his official title, but he's going to be kind of like a super czar or super secretary over not only Interior, but over the Department of Energy, who's going to have its own very capable former energy executive running that. He's going to be over agencies like the EPA and others, so that all of the things that dovetail into not only fossil fuels but our critical materials needs, it's all going to be under the auspices of him and the different agencies, not just Interior, that he'll be overseeing directly in a hands-on way. And last but certainly not least, and this happily tells us how President Trump views all of these subjects. He is going to be sitting on the National Security Council of the president. That's the first time that an energy secretary or anyone like that is on a National Security Council, because this will underscore the importance of these industries and getting them unlocked and starting to recapture our own ability as a nation to meet our needs for nickel, for copper, and so forth. Nickel, getting back to that real quick, you probably know this, the only nickel production in the US right now is the Eagle mine in the state of Michigan, which is doesn't have more than a couple or so years left, I'm told, of production. Now, there's been other ground stake near there. There's been a new discovery. There's a very nice nickel deposit that I'm aware of in Montana. There's the ones in Minnesota that I've mentioned. You've got North Met, you've got Twin Metals, you've got Talon Metals. So it's not like we don't have these metals. We do. We've got great resources of copper in this country, especially down in Arizona. But what we haven't had is the policy wherewithal and a policy game plan to be able to get these things out of the ground. And adding to that, to show just how far behind we are, we don't even have the labor force in this country that's skilled in these areas, that even if you opened all of these things tomorrow, they still can't be done because you don't have the trained people to know how to do these things. You don't have enough geologists and mine engineers and whatnot. And that's just how derelict the U.S. government has been for many administrations, frankly, going back, to not realize how fast this was all going to sneak up on us.
The energy independence story, I mean, it's just becoming larger and larger every, few months. The world is very polarized. And do you think like this will obviously be in parallel to the super cycles that people are calling out in commodities? And do you think oil and gas and uranium are probably the ones that will lead us through in the beginning and then follow with the metals? Or
I don't think it's going to be all at once. As I said earlier, some of what is going to keep the base metals slash battery metals hostage in the near term is going to be, I think, in 2025, we're going to see all markets kind of regroup a little bit. The U.S. stock market is unsustainably high right now. I'm not saying it's going to necessarily crash, but what typically happens is that when you have a market correction of some significance, it's going to be accompanied by worries that, okay, we've had such good times for so long because of all the money the Fed printed back a few years ago. And now it's kind of all, we're getting bogged down under the debt levels. We've borrowed too much growth from the future because of all of the easy money we had for so long. And now things are just going to kind of plod along. Near term, that's not going to be positive for metals. So I think as far as energy needs are concerned, My favorite story right now is natural gas. I think it's been unsustainably low for the last couple of years, benefiting from a lot of what could be one-off things. You know, you had two mild winters in a row, not only in our neck of the woods, but over in Europe. Things aren't starting out that way this winter. And so we're putting, you know, we're seeing a pretty good dent put in natural gas storage right now. And I think we're going to see $4 to $5 natural gas prices by next summer for a whole host of reasons. So that's going to be the leader because relative to other energy sources, it's the easiest to get. It's relatively speaking the cheapest. People are going to continue to go from coal-fired plants to natural gas when there's been a lot of those kind of conversions already. Nuclear will catch up. I was pounding the table bullish on nuclear energy and uranium a few years ago, and we were in the worst part of the market. We were $17 or $18 a pound for the spot price for uranium. We shot up to well over 100. Lately, we've been back, 75, 80, $82 a pound. You heard it here first. In 2 years, uranium is going to be $200 a pound. And the market will be able to bear that because relative to other types of power generation, when you're talking about a nuclear power plant, the cost of the uranium itself is actually fairly insignificant compared to the rest. It's not like what you have to pay for natural gas or oil or coal. So there's a lot of room for uranium to go up. The supply demand fundamentals, I'm here to tell you, Callie, are as attractive today at 77 or $8 wherever we're at on the spot price as they were when it was under 20, because the demand going forward is just going to keep going up, exponentially. I think what's going to happen, and this is one of the public policy things I'm working on, and I would encourage people to look up the website NIB, which stands for National Infrastructure Bank Coalition. This is a U.S. group that's had a bill in Congress for 3 or 4 sessions of Congress in a row to set up a national infrastructure bank. So I'll tell you what, to me, is going to really make a difference for commodities more generally. And that is when we inevitably do face, and really two things. Number one is more of an economic slowdown, but number two, when it dawns on everybody even more, and this will come fairly quickly, the crisis that we have in the US specifically and in the West generally over the lack of things like copper and nickel and cobalt and titanium and antimony and the rest. We're going to see an aggressive public policy that's going to try and jumpstart these things. And the perfect way to do it is through the auspices of a national infrastructure bank. The US is the only major industrialized country in the world that doesn't even have one. You even have one in Canada. Not that a whole lot has been done with it, but we don't even have one in the US. Now, during the campaign this year, President Trump was making noise like he wanted to do something along these lines. He was looking at it from a more investment standpoint and was talking about something like a sovereign wealth fund where the U.S. could invest. I don't know what we're going to invest with $36 trillion in debt. That's another story. The U.S. can invest in some of these kind of things. Well, the better idea is a national infrastructure bank. It's similar to what one of the banks was in the Depression era in the U.S. that President Roosevelt set up in those days. And more important, it's kind of like, and there's something in the news actually here in the financial press right now, Callie, in the U.S., of trying to privatize anew the U.S. mortgage agencies, Fannie Mae and Freddie Mac, which got out over their skis some years ago, as you might remember, and the U.S. government had to take them back under receivership. Now the balance sheets are at least somewhat cleaned up, and are trying to get them out in the private sector again and use private sector money in these agencies to help the housing market. This is what the National Infrastructure Bank is for. Same thing, except that as the name implies, you can take a very minor amount of money to get things started from the federal government to set this up. Otherwise, you have Wall Street and the private sector that funds this, securitizes it, and so forth. And you have trillions of dollars not on the federal budget, but in the private sector that can be put to work to train people, to hire people for all of these skills needed to bolster or restart, as the case may be, depending on what we're talking about, our energy supplies, our metal supplies, and a whole host of things. our power grid, which is a terrible, danger that we have in this country where we have a very unstable power grid in so many areas. It's very antiquated. A lot of roads and bridges and public buildings, especially in the upper Midwest and the industrial Northeast, are falling apart. And one of the ways in which you're going to be able to jumpstart economic growth and see to these needs at the same time would be through something like an infrastructure bank. And I think that once that realization comes, or something like it, and there's some serious money and serious public policy time spent on this, that's when you're going to get your next big wave. Because unlike, for example, during COVID, when the government just printed trillions of dollars, threw it at everybody for no productive return at all, except to just add to the debt. This is something that can be done that won't add directly to the public debt, but that will broaden the economy and broaden the tax base.
Like you said, some of the younger generations into mining and oil and gas and all these things, because I feel like there's this huge disconnect. You're telling, me, someone that's already been in mining and oil and gas for a long time, and I'm sold. But trying to tell a general millennial that natural gas is a good investment is there's a huge disconnect. So what do you think we could do besides I love that idea, but what else do you think would be helpful to try to change that narrative? They'll buy Nike shoes and an iPhone, which if you want either of those, you have to love mining and oil and gas.
You took one of the anecdotes I wanted to share right out of my mouth because I'm going back a few years, but I've got a nice circle of friends here where I live, a lot of the local cultural scene here in St. Augustine, Florida, the music scene, and I met a guy who's become a good friend since then, and he asked what I did, and I told him about my newsletter. So we're all sitting around a table. It was somebody's birthday party. We're all sitting around a table, and he's on his phone and he's looking up the National Investor. Oh. Well, I see some of what you do is mining and whatnot. I don't know if I like that. And I said, well, then take that cell phone in your hands, take it to recycling, get rid of your car. And I expect to see you walking places. I expect to see you sending up smoke signals and not using technology, when you want to communicate with somebody. People just don't get it. This is the old adage of so many people that have never been in a rural area. They think that milk comes from a grocery store rather than from a cow on a farm. This is the psychology, and that's not an easy job either, Callie, to get people to understand these kind of things. You talk about gas. In northern Wisconsin, where most of my children and grandchildren live, every year they have what they call the American Birkebeiner get together. It's a big Nordic type ski race, cross country, all different kinds of winter events and stuff. And the people that run this outfit decided a few years ago that they wanted to be woke or environmentally conscious or whatever, and they decided that Enbridge, you keep your money. We don't want a corporate sponsor like you anymore because you're dirty. Of course, Enbridge being a big energy and pipeline company. So I've got a great cartoonist who for years has done all kinds of great cartoons for me. People get a kick out of them. I come up with a harebrained idea, and by the end of the day, usually I've got my cartoon. So I said to him, I said, look, I want two slides. I want a picture of the ski team at the American Birkebeiner as they look with their parkas, their goggles, their skis, their ski poles, everything that's got any element of petroleum in them. The next frame, I want it with no petroleum products at all. So they're all wearing loincloths and animal furs. They've got, reeds and pieces of, a sapling. These are their poles for their skis because they don't want energy. They don't want petroleum products. So you just took all the clothes off your back and all your ski equipment away. So, but this is the mentality that people have. It's going to take some education. I think part of that education needs to be, and the US and Canada are great examples of this, that we want first world standards when it comes to what we need, whether it's oil and gas, whether it's copper, whether it's nickel or whatnot. Everybody knows infamously the conditions under which the battery industry The cell phone makers, the tablet makers have gotten things like cobalt over the years. It's from the Democratic Republic of the Congo, where you've got kids in muck and mud and chemicals up to their neck that are mining these things so that we can all be on our cell phone telling everybody how wonderful we are because we drive a Tesla, for example, or something like that. It just, there is this education gap that needs to be filled in, and we need to teach people that. Real quick, one more story on this. Um, One of the companies I follow in Mexico, they produce silver, copper, small but very nicely profitable mine over the years. Got a pretty good growth trajectory right now, again, after a couple of acquisitions. Several years ago, Samsung approached this company. They're domiciled in Canada, but their main project is in Mexico. They approached the company and they said, look, we want to be able to tell people where our metals come from for our products. Okay. Because this is properly so a big deal. It goes back. Remember the movie Cali called Blood Diamond
Yes.
years ago? This overlaps every commodity on the planet that we use. There's similar stories. The cobalt from the Congo, the blood diamonds from Africa, and so forth. So Samsung approached this company and said, look, we followed you for a long time. We know your standards. They employ a local workforce. They pay them good, high wages. They're good to the environment. They've been there for, I think, 50 years now or something like that. And so last year they had a ceremony where the CEO and some other management of the company were there with people from Samsung. And literally, from some of the metals that came from their area of Durango, Mexico, they gave back to the schools brand new Samsung tablets and TV sets and whatnot to use in schools. All right.
Love that.
Those those stories need to be ballyhooed. They need to be told where else they exist. And people need to realize that, look, let's not be hypocrites. Let's get over the NIMBY, not in my backyard attitude. And if we want the good things in life, let's take care of ourselves for a change. Let's do it right. Let's stop exploiting the kids in the Congo. Let's stop buying nickel from places like Indonesia, which have got all kinds of national security and human rights implications and so forth. And that's again another thing going to be easier said than done. But I hope that in this process with Secretary Burgum, with the other people he's going to have around him, and hopefully with the president himself, they're going to start educating the American people as to why we need to do these things. It's not just drill baby drill, it's mine baby mine, but it's also doing this right and doing it in a way that's going to create a lot of good jobs and high paying jobs that we don't have in this country right now.
I 100% agree. And I feel like for mining, everyone wants to blame them for everything bad. And I feel like a lot of the ESG and cleaner energy policies and the cleanup has come from them having to innovate and do better because they're
Right.
always the one to blame at the table at this
Yeah,
point.
look, there were years past, there's no getting around it. You can look at the terrible Superfund sites, in a few different parts of the US, Butte, Montana being a big example. I used to live out near there. Yeah, there were times before the government and regulators cracked down that mining companies got away with a lot of bad practices and they left a lot of bad stuff behind. But for every one of those stories, you can find companies today that even before they start mining or remining an area, they're reclaiming what was you know, messed up in the past. So a lot of stuff has changed. The safety of these things has improved, especially when we get back to nuclear energy and nuclear power plants. So there's again there's a learning curve. The average American has not had this. The average school kid doesn't know anything about any of this history, even if you live in some old mining areas to a great extent. So we need to get our heads out of our posterior orifices, I guess, so to speak, and realize that hey, if we want to continue to have a world-leading economy and all of the comforts that we have today, we need to do things right. We need to start to take the shackles off our domestic industries. And there are right ways and wrong ways to do it. Thankfully, after a lot of years of trial and error and a lot of the pollution, yes, that did exist in the past, we do know how to do it right today. Industry knows this.
Do you think Canada might follow the leader as far as you guys change your permitting processes and streamlining? Do you think that there's a possibility that Canada will follow suit, or do you think we're going to fall behind?
No, I think there is. And look, as things evolve and we come more and more to grips with the fact that number one, our country specifically and the world generally needs ever more of everything, whether no matter what form of energy, no matter what commodity it is. One of the companies I follow always likes to point out the error, for example, Cali, in the term energy transition. There is no energy transition. There's an energy addition. Every year on this planet, there is more demand overall for energy than there was the year before. You only had a slight change to that back in 2020 when a lot of the world was shut down for a short time. But other than that, you've had this accelerating upward movement in energy demand the world over since the end of World War II, as technology's improved, as the global population has grown, et cetera. And even more so now, when you look at data centers, when you look at artificial intelligence, when you look at how much juice all of this stuff requires, there's a need for ever more of this. And so Canada, if I was a Canadian citizen, I'd be even more frustrated than I've been as a US citizen, because in relative terms, Canada has far more in terms of natural resources based on its economy than we do here in the US. And so, by rights, if there was the proper leadership in Canada at the federal level, and some of the provinces are better than others. I know they've all got their own practices when it comes to, resource extraction and so forth. Ontario and Quebec have both made a big deal out of wanting to be leaders in the energy transition. There's been a lot of provincial money in both cases that have been spent. Not that others haven't done it, but they've been pretty high profile. And if you were able to couple that when you get a change in your government up there with a more aggressive federal posture, Canada could have a veritable boom. In fact, I think, and I've told people this, that when you look at the level of the Canadian dollar right now against the US dollar, if I was a currency trader and could make a long-term bet, I would be buying all the Canadian dollars I could get right now, because in a few more years, when the commodity boom broadens out because of all these things we've been talking about, and you've got more production in Canada that makes its economy look stronger, you'll see for the first time in a lot of years the Canadian dollar being equal again of the US dollar, I think. That's what the potential is up there.
Wow. I feel like that's going to be heard here first on this podcast. I
I
love
know it seems strange now when you look at the things today.
I love
What
that.
it, yeah.
So we've covered a lot of this. I want to focus now on the juniors. Like you said, everyone's calling for this super cycle in commodities. The world has changed, investors have changed. Where do you think juniors can start fitting in or being more aggressive, or what do you think will help get them back on track, like investors interested in exploration companies again?
Well, look, the first thing I think everybody needs to understand, if you're a junior company, if you're carrying water for junior companies, we do a lot of media work for companies that I recommended a national investor. You do media work. Literally, the people years ago that used to jam gold conferences and resource conferences, literally, and I saw this with my own eyes years ago, people standing in line when a company's doing a private placement with their checkbooks to write checks at a gold conference. This happened all the time. They're all dead. And the problem now is that a lot of companies that are, if you got a gold project especially, but even other resources, the pool of investors that you're trying to make yourself relevant to is radically different than it was a generation ago. Most of the come-ons that I see from, I sometimes call them the Pied Pipers of the gold bug echo chamber. They're trying to outdo one another on dopey conspiracy theories. You got to buy gold because next week Joe Biden's going to take your bank account and give you Biden bucks in return, his controllable central bank digital currency, and all of these dopey false claims that a lot of people made. Now, back in the day, when you had a much larger group of investors 30 or 40 years ago that loved gold and they couldn't get enough of that kind of stuff, okay, you could be relevant to people. And the junior companies that hitched their wagon to that kind of promotion did all right, and especially if you had a run up for gold that was going up for a little while, people couldn't get enough of it. Today, you don't have that kind of clientele out there, Callie. And the average investor today, number one, has got a lot more play toys at their disposal. All right. If you can believe it, in 1980, when gold hit a peak of over $800 an ounce briefly, do you know what the percentage was of the capitalization for gold related mining stocks in comparison to the whole stock market?
No.
20% of
Wow.
the market cap of the entire stock market was mining companies. Okay. Today it's less than 1%. And this is even with the recent record high gold price and the rest of it. So there's a lot more out there for investors to choose from. And you need to have a narrative to make yourself relevant. I'm about to release again. I do this about once a year or so. I come out with these thematic special issues of mine and try and educate investors as to how the dynamics are today. So you'll love the title. The title is "This is Still Not Your Father's Gold Market." And I explain what has changed over the years that I've been seeing this. And what people need to do today, not only juniors, but even the producing gold companies. If you look at the GDX, for example, the exchange traded fund, it's an amalgamation of a lot of the bigger ones. It's still selling for way below its peak of 13, 14 years ago when mining stocks hit a peak way back in 2011. Gold is $800 higher than it was back then, and these stocks are still a lot less. And there's a lot of different reasons for that. Now, they're not going to stay there. And I do have a very bullish long-term view for the gold price. And I do think that over time, the stocks will start to catch up, but it's going to be very selective. It's not going to be a rising tide lifts all boats kind of environment. And so investors need, and I teach them how to do it in this special issue, they need to understand how to pick and choose between individual companies. What are the characteristics to look for? They need to realize as well the things not to do where the gold space is concerned. And I won't get into all of the specifics of that, not to step on anybody's toes too much, but there's a lot of pitfalls out there, and there's a lot of promoters, and unfortunately a lot of junior companies will ally themselves to these kind of promoters thinking they're going to get more attention, that come out with just a lot of cockamamie predictions and scare tactics and whatnot that is absolutely not going to resonate with investors today, even if it turned out to be true, and most of them aren't. So you've got to be able to break things down. And for example, when I talk to people about gold, I'll say, why do you think it is that after many years of central banks selling gold, you've got central banks over much of the world, with the only exception being the US and the Western nations, they've been buying gold. Why are they doing that? Is there something that they see that we don't see? Is there really a changing of the guard coming in the world that is going to make gold specifically and commodities generally more relevant? We've all seen the charts comparing financial asset and commodity prices, and we're at a generational lull for commodities. Now, some of the reasons are legit for that, but I'm one of those who does believe in the next 8, 10 years that we're going to see those move back into some, you know, semblance of balance, meaning you're not going to be able to make as much money just by chasing the Magnificent Seven stocks or other stocks on Wall Street. And yet, when you look at all of the demand for commodities, when you look at the public policy things I've mentioned that I think will come about at least somewhat, that will drive the next bull market for commodities. And so you will see these things come back into line. Gold will be included in that, but you know, I'm hoping for a world where the commodities do well together because of good public policy and meeting people's needs and a good economy. The scenario you don't want to see, if you're a consumer and you want peace in the world, is where gold is alone in flying higher, because that means the economy is broken if the other commodities aren't going with it.
Well, you make a good case for knowledge, and obviously that's your motto for your National Investor newsletter. Can you talk to our following about what's included, what they can expect if they're interested in joining, and then obviously for any of the public companies that are interested in being featured, how they can reach out?
Well, sure. Simply go to nationalinvestor.com, my website. If you're not already on my list, the least you want to do is sign up for my free list, where I have a lot of general market commentary, links to podcasts and interviews I do, like this one, and others. And I basically wear two hats. One is I try and give people my best unvarnished view of what the big picture is. So I'm not a perma bear. I'm not a perma bull. I call things as I see them. If I think things are pointing in that direction, I'll actually tell people to short some commodity areas if I think that that's the right thing to do, even if I'm long-term bullish on them. So I try not to get caught up in a lot of the propaganda that's out there. I'm very opinionated. You'll find that if you follow me for any period of time. I guarantee you that. But uh, paraphrasing something that my youngest son-in-law sent me a while back, my convictions, I hold tight to them, and I'm pretty unwavering. My opinions, however, I don't hold tightly to if I'm presented with evidence that I should have a different opinion. And frankly, Callie, that's the problem with a lot of investors. I have seen, for example, gold investors and their gold gurus alike. How many times do you hear them come out and say anything bearish about gold over the years? Never.
That's true.
You can't be an objective investor or analyst, either one, if you're not going to survey the landscape and every now and then say, all right, well, maybe we better sit on the sidelines for a while, or sit this one out. Or maybe the market, we don't have to like it, but maybe the market is not conducive to what we think it should be doing. It's like the old saying about short sellers. The market can stay irrational longer than a short seller can stay solvent. And people have learned that lesson again recently with these record high prices that we have for US stocks. Again, there's a lot of stuff coming in the near term, not only the gold issue, but a couple other special issues coming out. Plus you're definitely not going to want to miss my 2025 theme. Every year around the holidays, give or take a little bit, I'll put out what I think is a working theme for the year ahead. So for 2024, the title of my talk, and I did a couple video versions of it as well, was called, if you want to understand 2024, you need to understand three words: supply, supply, and supply. And that word had relevance to specific commodities. Some were in oversupply, which is why their prices came down, like we talked about earlier. And it had to do in a different direction with the fact that long-term interest rates can't come down that much because there's so much supply of debt that needs to be financed and refinanced in the US. We've got a $36 trillion annual total debt, $3 trillion current annualized deficit. And that's during a time we're told the economy's been doing well. What's it going to be if it goes the other direction? So 2025's theme is going to be somewhat similar to that, but it's basically going to be in 2025.
Well, that does it for today's Exploring Mining podcast. If you'd like to be a guest or sponsor for this podcast, please contact InvestorIdeas.com. InvestorIdeas.com reminds all listeners to read our disclaimers and disclosures on the InvestorIdeas.com website. All investment involves risk, and this podcast is not meant to be an endorsement to buy or sell securities or products. To hear more podcasts, you can go to InvestorIdeas.com/audio. And a reminder, you can also hear our podcasts on iTunes, Spotify, Google Play Music, iHeart.com, TuneIn, Stitcher, Spreaker, and SoundCloud.